I've got Matt Porzio here, who is the VP of Strategy and Product Marketing for Intralinks, and he is the one that is responsible for Intralinks Deal Flow Predictor. Matt, thanks for taking time out to talk to me. I appreciate it.
Thanks for having me on, Chris.
You bet. And one of the things, I've got numerous questions I want to ask you about on the Deal Flow Predictor, because I think it's a wonderful piece of information that we put out that I'd like to spread the word on and such. So first question I'm going to ask you is, what is the Deal Flow Predictor?
Sure. Well, about 4 years ago, we started to track deals that were reaching the early stages of the M&A cycle, really before they were, or as they were getting into due diligence, right? Having a significant amount of market share here at Intralinks for the virtual data room market, we started to see deals that were both going on our system, but also looking to use other virtual data rooms potentially. And we started to track the trends and changes from quarter to quarter of the volume of deals reaching that early stage. Then we started to compare it to announced deals a few quarters later and realized there was a direct correlation between what we were seeing in the market to announced deals about 6 months later. And thus the Deal Flow Predictor was born.
Excellent. What so you kind of went into it, but how does it work? Like, what are you actually looking at in these deals and such?
Yeah, in terms of the deal flow, we look at it on a global basis. We measure the number of deals that are moving into or looking to use a virtual data room. So that might be on our system, that might be another system. They may actually choose to remain old school and do a physical data room process. But the deal has gotten to a certain stage where they're going to invite buyers in to do that next level of due diligence. So that deal has become pretty real. Typically, once a deal reaches that stage, less than 20% of those deals don't reach announcement. So it's a pretty good indicator of deals that will eventually get announced. And again, because we work with bankers, corporate development teams, lawyers on a global basis, it's really a broad view. So compared to bankers who might work in a particular industry or in a particular country or region, we really have a global view. And then we slice the data and look at it on a regional basis, but also by a sector view, really kind of high-level sectors. We measure about 12 different sectors and report some information related to that as well.
Some of the stuff too is one of the slides in the most recent one, which is Q1 2015 is when we released it. It shows kind of how accurate it's been. So can you touch on how accurate you guys how Intralinks has been in predicting the M&A marketplace?
Yeah, I mean, one of the things we've done to kind of confirm its accuracy, and really we use kind of the standard or gold standard of measuring announced deals, which would be Thomson Reuters and their database of announced M&A deals. The real key for us has been to then get a third-party analysis firm that does statistical analysis and compare what we see in terms of quarterly and year-over-year changes to that announced Thomson data. And what they've shown is that there's almost a 95% correlation between our data and then the announced deals that happen 6 months after that in that Thomson data set. So we have a third-party firm, do that analysis, do that regression, and not to nerd out, but things like the P squared and R squared, came out to show that this really is a predictor of announced deal activity. Not the value of deals, but the number of deals that will be done in each region and globally.
Interesting. Now the other thing too is that you just touched on is the way the report's broken out. It is over different regions and also kind of gives an idea of what the deal flow is. What are the different regions that we're looking at?
Yeah, we look at the major region, North America, including and really driven by the U.S. and Canada. We look at EMEA, which is Europe, Middle East, and Africa, but significantly weighted towards Europe in terms of where deals happen. Asia Pacific, which is a broad region, but includes China, Australia, Japan as major deal centers, and then we also look at Latin America, including Brazil and South America. So those are the regions that we track. In terms of deal flow, clearly North America and Europe are the most mature markets and do the most deals. But the other markets are growing, and the trends that we identify in emerging markets are interesting as well.
Hmm. It's it's wonderful because it breaks it out very well in the report. So I highly recommend anyone take a look at that, and I'll have links on any of my posts or in my videos to get to that. So how often is the deal flow predictor released so that people get an understanding how quickly they can look at this sort of stuff?
Yeah, so we do it quarterly. Typically what we're doing is aggregating our information and our data from our systems. That takes a couple weeks after the end of the quarter, right? We want to use as full and complete data sets as we can. And then we put all the commentary and the information. We usually have guest commentary as well. In the most recent quarter, the one that's predicting 2 quarters out that we just released here in the first quarter of 2015. We've got the head of the sponsor coverage at GE Capital, Stuart Aronson, who's done a little guest commentary, and we'll do that every quarter throughout the year so we can compare trends over time, but also year over year, last 12 months, but also quarter to quarter changes, which are typically the most interesting and most recent data.
Now, the other thing, just I want people to be aware that may think that something's going on here. In no means are we exposing any of our clients' data out in the world. So they remain anonymous. So I just want them to understand that too, right?
Yeah, it's all on a very aggregate basis, right? This is about information, and really if we go back to why this started, I've been with Intralinks 12 years. I've been in the M&A market, close to 20 years in my career. And when I was out there with Intralinks, even in the early days, bankers, lawyers, deal professionals would ask, what are we seeing? They see what their firm does, they see the niche that they play in, but they knew that we were seeing and working on deals all across the world. And that's really why we started the Deal Flow Predictor, was to give them that sense of what we're seeing in the aggregate. But to your point, Chris, absolutely never would we violate the confidentiality of individual deals. But on the aggregate of deals we do, but also deals that are in the market, that might choose to go physical and not use our virtual data room, we're also able to report on those as well.
Excellent. Matt, I find it hard to believe that you've been in the M&A space 20 years. You only look like you're 25, dude. Anyways.
Beard.
Exactly. Hey, so one of the ones is we break it out, and I don't want to be, I don't want to keep the rest of the world out, but because I'm North America based, I'm more focused on North America. What are we seeing in the M&A space in North America?
Yeah, North America remains strong, right? If we look at the data from even just the last, few quarters, really Europe has kind of taken a lead over the last 12 months, almost growing on the order of 20% when we compare it to the previous last 12-month period. But North America is not far away, right? Almost 15% growth, still strong quarter-over-quarter growth. The one thing I would say is, while North America remains strong, I think as we head into the rest of this year, there's a sense of cautious optimism. It's been good, really, for the last 4 quarters. How good or how much better can it get is really, I think, the question that's weighing on a lot of people's minds. But based on what we'll see in terms of announced deals through the first half of 2015. North America is very strong. The middle market in particular is extremely strong. And there's not really anything that's going to, put the brakes on that or put that on hold. It's really just, I think, everybody waiting for, when is the peak, and can you time and know when you're reaching a peak and adjust accordingly.
Absolutely. Well, in North America, what sectors do we see that are strong right now?
Yeah, it's interesting. Technology, media, and telecom, really on the media telecom space in the mid-market, right? A lot of new media deals still getting done. In other areas, energy, due to commodity prices has recently slumped, but before that was pretty strong and doing well. Consumer products, especially brands that kind of span into a little bit more of that technology media space. We're helping drive deal flow, in that announced deal flow that we'll see in 2015. One interesting trend, though, will be to see what happens now that commodity prices, and I know in the market, Chris, that you're focused in, it'll be interesting to see if, it might slow over the next quarter, but then will buyers come in and be able to cherry pick some undervalued and distressed assets? I think we are going to see some consolidation in mining and metals and energy through the second half of 2015.
Absolutely, I agree with you on that one, and that's hopefully that turns out true. Any weak sectors that you've seen?
Yeah, real estate is, it made a little bit of a comeback in the data that we saw last year, but hasn't been strong. I think everything around the housing sector has kind of struggled, even, some of the building products, while there's been some bigger marquee deals and some of those stocks have rebounded. That whole sector and everything related to real estate has been kind of in the doldrums, especially if we look on a global basis. But in North America, it hasn't really rebounded too well. Even technology, some of the, if we break that sector down a little more, some of the old line kind of hardware technology, not a lot of great things happening there. Certainly the mining space has not been great for deal flow over the last few quarters, and what we're predicting isn't necessarily going to change that in the near term. But generally it's a story of people wanting to buy exciting brands, future growth, a lot of big companies with strong balance sheets, going and picking off assets in the mid-market still. That's really the driver.
Well, one of the things I did see in the report is something happens in Q2 pretty much every year.
Yeah.
You see a pop. What do you see, and what do you think that is?
Yeah, there's definitely some seasonality in deal making. I can even tell you when I was in banking, one of the things that I always, considered was, year end, right? So bankers who are driven by bonuses and fee potential, if you're not starting a deal in the second quarter, if you're not getting, towards that diligence stage or contemplating needing a VDR, ensuring that you're going to close by year end is difficult. So I think what you find is a lot of people coming into the beginning of the year, deal flow can be a little slow. Budgets have just been approved. Strategies are still being sort of hashed out and finalized. But as you move into that second quarter, that's where everybody starts to hit their stride, realizing, hey, we've got to really push hard to execute on our strategy. By year end, some people in their strategy commit publicly to the markets that, we're going to expand into certain regions or product sets. And that drives deal flow. And then still, again, also, from a tax consequence, people monetizing or selling assets are going to say, hey, we plan to have this done this year. If we're not out in market, by the end of Q2, we might struggle to get that deal done. So you're always going to see a bit of a pop in our Q2 data, which again is the pop that you see in all the announced deal data from Thomson in Q4 typically, or Dealogic or any of those other sources.
One of the things too I saw was the graph of deals over time continually seems to be creeping up, obviously, right? So any thoughts behind that too?
Yeah, if it might not be to the historic levels that we saw back in, '06, '07. But the deal flow, especially on a global basis, keeps increasing pretty significantly. And when one region's down, we tend to see a flow into another region. But in terms of that deal flow and that increase, climbing out of the financial crisis, certainly, we're still not nearly at the levels in terms of number of deals announced each year of that '06, '07 vintage. If you think about private equity in particular, their deal flow is still, down probably, 30% from the peak that we saw in that market, in '06, '07.
Okay. So the other thing too, it's like I say, it's wonderful information that's contained in the report. How do you see companies using this information, or do you have any kind of tips or tricks that companies might want to take a look at by using this information? How can they glean on what they do and use it to their advantage?
Yeah, I think if you're a corporate development professional, if you're an advisor in the marketplace, you're always trying to get a sense of where deals are coming from, when they're happening, whether you're a buyer or seller. You want to know the landscape, right? And everybody uses historical information typically, right, is using the Thomson, the Dealogic data, the Capital IQ information. But those deals, recognizing when they're announced, were probably contemplated or even begun maybe a year ago. and got to a due diligence phase 6 months before that. So if you're using that data to get a sense of should you go to market, what's happening in the market, it's too late. It's outdated. So the deal flow predictor, at least on a macro basis, a regional basis, on sort of that macro sector or industry basis, can give you a sense of what's happening. And is it the right time for you to test the waters? Is it the right time for you to be buying or selling in a certain industry, or maybe look abroad into different regions based on what we're predicting or showing in deals that are actually in market now. So you can use that to get a sense of, and really play it against your strategy and the themes of your strategy to see if, now's the right time. And then, one thing we didn't talk about, Chris, which, is an accompaniment to the data and the deal flow predictor, is the sentiment survey. So we also go out and, interview hundreds of deal makers each quarter as a companion piece and get their sense of what's going to happen for the next 6 months and what do they plan to do in their particular region, sectors, etc. And that data helps kind of give you a sense of what's happening right now, but what could happen even beyond that. So those two things and the interplay between them, right now it's indicating the market's strong. A lot of deals will be announced, and deals that are announced beget more activity. But the sentiment has kind of come off the peak, and people are starting to be more cautiously optimistic rather than wildly optimistic. So that's kind of how I would envision people using it at a macro level, but then applying it to their own strategy.
Gotcha. Last thing I want to ask you is there anything that I may have forgotten that you think anyone should know about the deal flow predictor?
No, I would just reiterate looking at the sentiment survey piece and tracking that against the data. The other thing in terms of the data itself, going down to a more granular level is something we aspire to. The information right now at the macro sector or macro regional, we do have some better data around North America and things that I often share in media interviews and at conferences going down the next level. So, the one thing I would encourage, your readership, listenership to do is to talk to their Intralinks, sales reps, to the team here at Intralinks, to get more understanding about what we're seeing in real time in the market. I know, Chris, in Western Canada in particular, you're the guy who's connected and knows a lot of what's going on. I think Intralinks as a company is a great source of information, and the people that have worked here and been in this market know quite a bit, and we're a great resource.
Absolutely. I have to agree with that. I mean, we create some absolutely wonderful information that's invaluable to people. So, Matt, it's I appreciate you taking the time out. We have Matt Porzio here, and he is the VP of Strategy and Product Marketing for Intralinks, and I will have connections for people to take a look at getting the deal flow predictor down below, and also links in any of the videos so that they can access this. So stay on for a sec, Matt, and then I'm just going to cut off. But appreciate your time. Thank you.
Thank you, Chris.